here today for the realagriculture.com beef market update with Ann Dunford. Welcome today, Ann.
Hi, Sean.
Okay, Ann, this is a really interesting spring. Now we're talking about $200 barley. Now we're talking about $200 dress cattle. Are we going to push through there?
Well, we got awful close, and so anytime you get close, a guy better be careful drawing the line in the sand. With today's strong dollar, here we are, we're talking on Wednesday, and dollar's made a big move up today, of course, to 104.5. So given that, I doubt we're going to get the job done. Who knows? It's such a big factor, but awful close. Trade at 198, 198.5, kind of topping things off last week and to start off this week. So I think at this point it gets a little scary to suggest we do or we don't.
So we're trying to put some cattle back in these pens. Is there the ability to do some contracting to kind of take care of some of the risk?
Yeah, absolutely. Whether somebody's looking at a hedge off the live cattle market, or whether they're looking at a physical forward contract to a packing plant, in both cases, there's been ample opportunities. Maybe not at some big profit margins, but most certainly at some smaller profit margins, and each individual operator is going to look at that differently as far as if they do or they don't, or what percentage they do or they don't, large or small. And so there have been opportunities, even with this very strong feeder cattle market and break-evens, we've still had opportunities on the fat cattle side to look at some profitable levels.
So where do we go from here? We're living in this utopia, I guess, or not a utopia, but we're living in a time where we've got some record high prices. I think you said the highest prices since 2003, is that correct?
For here, and of course record in the US, yes. Yeah.
So where do we go from here?
Well, again, it's spring. All of this from a timing perspective. Anytime you get into these levels and it's you're not sure of how you got to go back to kind of history, or I always go back to history, and things like spring highs, pretty solid trend. I know they didn't work last year, but I still think I'm going to go back to those this year, and so timing is likely for a high in here. I don't think we better fight that. Basis levels vis-a-vis the US are very, very narrow right now, and so again, that's telling us to continue to sell cattle and stay aggressive and stay current in our marketings, and everybody's doing exactly that. So the indications out there are saying, the good, solid, strong markets. We know we're going to be going into more cattle placed against the summer months, both here and in the U.S., just because of how cattle were placed this last fall. And so just with what we see on the cards today, I think we have to expect seasonal transition. So from a spring high to a lower price in the summer, and everybody's asking, well, what is that number? And a typical decline historically from a spring high to a summer low in the U.S. would be anywhere from 12 to 13 to 14%. So markets could come off, and again, that's history telling us that.
So we had a pretty bullish USDA stocks report last week. Say a 15 or 14% decrease in the live cattle price and feed costs staying where they are, producers are really going to have to take care of some of that risk. Yeah,
so that's when things start to change, of course. Now we'll have to watch the deferred months on the live cattle board. So we've talked about the summer, but I think the focus now going forward, of course, will be on the third, fourth quarter and first quarter of 2012. So it'll be interesting to see what happens going there. Hopefully most have taken care of their needs, their requirements, talking about this lower possible market in the summertime. Beyond that, of course, is where we've still got some pretty good activity on the futures markets, still some very strong prices out into third and fourth quarters of this year.
Has there been any feedback from the retailers coming back saying, because I think a lot of people are saying, are consumers going to pay this price for the beef?
And that's the $64 question right now, Sean. I mean, we know these prices have to get passed along. We know consumers are going to be spending more money on food as a whole, or I guess that's my belief. And so what is the response? Where do consumers turn to other choices? Now, right now, pork prices are also moving up along with beef, but there's still poultry out there. And so that, where does the buck stop or where does it fall? That's an answer that we'll be able to describe or talk about a little better, I think, as we go through this year. Right now, we know they're getting passed along or just starting to, and what the reaction is. Now, having said that, that's a domestic story. We can't ignore the export story when we talk about beef prices or pork prices. We just had news this week, of course, U.S. Tentative numbers on the first quarter, U.S. beef exports up 50% over last year. So South Korea and even Japan at this point still export. So big numbers there. That's a big part of demand, and that's maybe the kind of the fly in the ointment right now.
Yesterday, you sat in on a session. The CEO of Cargill Global was in town to talk to producers. What were some of his thoughts?
Well, an interesting, this was the CEO of the largest private company in the world, and just very interesting to hear the stats on the company and things like that. But overall, I'd say, Sean, that there's no question he and the company are looking at, as we all are, just generally speaking, global beef supplies declining. And of course, and again, I think you could even stretch that across the pork complex as well. And at the same time, seeing global beef demand increase. And some of his comments about as consumers move from low areas of salary into higher levels of income as they go along, and what that does to beef consumption and beef demand. And so very, very positive comments from that perspective. And again, same question asked in regards to how do consumers, retailers react to these price levels, and basically the response from the Cargill people where that's something we're waiting to see.
So did he comment at all where North America fits now in the beef trade? Like, obviously Brazil is a huge producer of beef. How do we stack up?
Well, he talked more about the company, and of course their company is largely North American based, and I think one of their focus, as I understood the discussion yesterday, was that their focus is to expand more business opportunities into Asian markets. So I think from a company perspective, they sure are looking to move beyond the North American marketplace, which is, of course, today still more than 50% of their business. The one comment he did make was more specifically about China, and that China is in the area of 26% of the consumption of all agricultural products globally. So lots of talk about China yesterday.
So do we see beef demand in China continuing to rise then? That
was most certainly the indication. Both pork and beef demand in China increasing as consumers get more affluent and move out of poverty-stricken areas into areas with more dollars to spend. So yes, that's a focus for I think everybody, and that was the read I got from Cargill yesterday.
Okay, thanks a lot, Em. We'll talk to you again in 2 weeks.
Thank you.